So the US investment banks in particular, headcount for them in Hong Kong tends to be around about a few thousand each. There is a selection of their precise headcounts for you. I've spoken to senior sources at a number of US investment banks with a presence there, and they all paint a pretty similar picture. First, that they're putting employee safety first and top of the list, that they're not taking sides on the issue. They're very concerned, and they're all committed to Hong Kong in the long term. But other than that, I was a little surprised to hear how much typical business is still continuing. One senior Hong Kong-based executive said, quote, "Clearly not business as usual in Hong Kong. The situation is anything but usual. But commercial operations are continuing very close to normal." They say markets are open, clients are transacting, volumes for August are pretty typical, certainly not lower because of any inability to function. That may not be the case for construction firms, for example, they said, but for banks, it's fine. I'd say that the airport shutdown definitely has elevated things, so you're not traveling to see clients. But if that's only a short-term factor, it doesn't really alter the business flow for a bank. So I was kind of surprised to hear that. Essentially, it's saying most business functions are continuing normally.
Yeah. You know, I think one of the reasons for that is, so I ran a global research department. We had an office in Hong Kong. It was a number of years ago. I ran a global sales organization. We had Asian offices. And the reason why business is about normal is because there's not much business there for a U.S. investment bank. It's picking up a little bit, and the hope was that Alibaba, with their relisting or additional listing on the Hong Kong exchange, was going to elevate the stock as you democratize the ability for investors over there to get involved in it. I don't think you're going to second guess those plans, but the timing may be uncertain on that. But that's going to be the next big lift there. But you have issues here which are continuing to force U.S. companies rethink their investment there, not just from trade, but now from unrest. So that's another reason why I think you've got to take a second look at your exposure and also your bond exposure. This isn't going to drive yields higher in the U.S., it'll drive them lower as you increase that run, that dash to safety in treasuries.
I mean, I definitely, clearly the banks would always say, we're not going to take sides and we're committed to Hong Kong in the long term. Right. Whether on the record or off the record, I wasn't expecting them to say otherwise. So that's not necessarily indicative of huge long-term commitment. However, what I would say is they all need exposure to China. Absolutely. And if Hong Kong does decline a little bit in the long term as an access point to China, I think they'd be moving to Shanghai as much as, say, to Singapore. Because if China's going to allow Hong Kong to decline as a financial center, it would only do so if they know Shanghai is ready to pick up the slack, as opposed to losing a lot of business to the region as opposed to the mainland.
That's exactly right, but they have to open their markets a little bit. The market's still very closed, still very restrictive, and you've got to be prepared to really open the kimono to the Chinese authorities, to the regulators, and I'm not sure the banks are ready to do that just yet.
The only other quick thing I'd say, general point, and this is from broader conversations with people based in Hong Kong as opposed to necessarily the banks, I'd say the take there as to the likelihood of the PLA actually coming in is a little bit lower than perhaps is being framed in the press here. And clearly that's a big swing factor as to whether this escalates and hurts global markets. Yeah. I'd say that the base case is that's still less likely to happen than perhaps people here are thinking.